After a dismal start to 2016, U.S. stocks appear to be on the rebound. Investors have been encouraged by several strong earnings reports, but the price of crude oil continues to fluctuate. Joining me to make sense of all this is Jason Howell, Family Wealth Advisor at Jason Howell Company. Jason, let's start with oil prices. On Monday, they went up, energy stocks followed, and the market closed higher. On Tuesday, just the opposite. Why does this continue to influence the market as a whole, and is there any way to know if oil prices are finally stabilizing?
Well, it's influencing the market because a lot of people, a lot of advisors are participating in market timing, which they shouldn't. But this is what happens when you get paid to trade. A lot of advisors take the moves that they shouldn't, and their clients suffer the price for it. In regards to whether we'll know whether oil is going to be different or actually stabilize these days, we won't know, but there are some indicators that give us a little bit of a hint. There's a meeting in Moscow coming up on March 20th with the Organization for Petroleum and Exporting Countries. These folks are going to talk about, even with non-OPEC countries, about tightening their grip on the supply of oil, and that should give us an indicator about what's going to happen in the future. Couple that with summer and the driving season, and we should see some stability coming up.
It's like herding cats, though, because Iran doesn't want to participate. They've got all the reason now to be selling oil now that these sanctions have been lifted, so we're just going to have to wait and see.
We are. I mean, OPEC tried to just keep flooding the market. That was their goal in the past 6 weeks, to see if we could bankrupt, especially some of our U.S. countries or companies. It didn't work, and so now they're having to go back to the old skills and tricks of the 90s and 2000s to try to tighten things.
Generally speaking, healthcare and pharmaceutical stocks are hurting. There's a lot of noise around that sector, and a lot of it is coming from the presidential campaign trail. Will this continue through the general election, do you think?
Yes, because it's working for the presidential candidates, especially the outsiders. As much as they keep talking about it, the more popular that they get. But companies have already started to adapt to what's going on. We're seeing so many mergers, whether it's Aetna and Cigna or Humana and Anthem, or that may be backwards. But those folks are looking at economies of scale. This is how you react when prices get lower. You try to find ways to make more profits, and that's why we're seeing a lot of merger activity in this industry.
Even the outsiders, even the insiders. Hillary Clinton was being bad to the pharmaceutical companies because of the high prices, so everybody is using that as a whipping post.
Yes.
Now, investors are also watching the Federal Reserve for signals. This week, Vice Chairman Stanley Fischer said inflation may be starting to tick up. Now, that's a key indicator for further interest rate hikes. Put this into context for us.
Well, remember, the Federal Reserve has a couple big jobs, and one of them is to stabilize the economy, which is a huge job, but specifically stabilizing pricing. And so when we have someone saying that we're going to maybe increase the rates to reduce inflation, that's kind of a good thing. I mean, think about where we were just a year ago in cutting rates, and look at the rest of the globe. We have Europe in negative interest rate territory. We've got Moscow and Russia worried about oil prices. We've got China with manufacturing demand slowing. The United States economy is looking pretty good these days.
Jason, before you go, I'm curious, what have we missed here today? Which sectors are on Wall Street are doing the best, and which ones are hurting the most?
Well, as you know, Morris, past performance is no indicator of future results.
Right.
However, drastic performance is usually an indicator of something. I would look at the folks who've been hurting, or the industries and the sectors that have been hurting. Emerging markets, for example, has taken a beating all year, so it's a good time to look to see if there are any diamonds in the rough. And we've been talking about oil in that industry, which has been the worst since 2009, that sector. So starting to look at things, for example, if I told you that if you were about to buy into a franchise where prices were going to be increasing, stabilizing, and demand was going to increase in a few months, I think you'd be pretty interested in that company and that franchise.
Interesting. Always good to hear your advice. Jason Howell, Family Wealth Advisor at Jason Howell Company. See you next time.
Always good to be here.
Thank you.
Thank you, Morris.